Good morning, and welcome back. It's Tuesday pre-market, and the big question for NIO right now is simple. Is today the day we finally crack $5? On Monday, NIO closed up 1.45% at $4.91. That's not a huge move in isolation, but it's the kind of steady gain that brings us right to the doorstep of a psychological resistance level. And in trading, $5 isn't just a round number, it's a marker that can change how the market behaves. So today, we're going to break down the technical picture, the fundamentals that could fuel a breakout, the broader EV sector context, and what to watch in Tuesday's session if you're looking to position yourself ahead of the move. Let's start with where we are technically. NIO has been hovering just under $5 for a while now. The last few sessions have seen multiple tests of the high $4.80s to $4.90 range, and each time, buyers have stepped in before any major breakdown. That has created a sort of staircase pattern higher, a sign that the market is willing to accumulate shares without a massive news catalyst. Right now, the $4.80 level looks like a soft support zone. That's where the stock has found buyers willing to absorb selling pressure. If that support holds through today's open and we see an early push toward $4.95 to $4.98, the odds of a $5 test increase significantly. From a technical perspective, breaking $5 with conviction, meaning a close above it, not just an intraday spike, could open the door to a move toward $5.30 or even $5.50 in the short term. But technicals are only part of the story. The real question is, what's fueling this underlying strength? Because Monday's move didn't come from a big earnings beat, a surprise delivery update, or a government policy announcement. It came from something more subtle, steady investor confidence, built on a foundation of improving fundamentals. One of the most compelling of those fundamentals right now is NIO's battery swap network. This is the kind of story that doesn't always make headlines, but it can make a huge difference over time. NIO has now passed 80 million cumulative battery swaps, and they're averaging about 97,000 swaps per day. That works out to roughly one swap every 0.88 seconds. Think about that for a moment. That's constant, continuous usage across their network. This isn't just a novelty or a side feature, it's becoming a core part of the ownership experience for NIO drivers. In many cases, customers actually prefer swapping to charging because it's faster and more predictable. You pull up, the old battery is removed, the new one is slotted in, and you're back on the road in just a few minutes. No waiting for a fast charger to become available, no wondering if you'll get the full advertised speed. Now here's where it gets interesting for us as investors. Analysts estimate that a battery swap station breaks even financially at about 60 to 70 swaps per day. With usage now well above that network-wide average, many stations, especially in dense markets like Shanghai, are already cash positive. That represents a major turning point in the economics of this infrastructure. In the early days, battery swapping was a huge capital expense. You had to buy the land, build the stations, purchase the batteries, staff, and maintain the sites. It was all cost, no direct profit. But when you cross that break-even threshold, those fixed assets start generating revenue. That can have a significant impact on NIO's margins over time. And the benefits go beyond just financials. The battery swap network is also a strategic moat. Tesla has its Supercharger network, other EV makers have partnerships for fast DC charging, but no one else has built a large-scale, consumer-facing swap program with this level of adoption. It locks customers into the NIO ecosystem and gives the company control over battery quality, lifecycle management, and upgrades. Those are long-term competitive advantages that are hard to replicate. While battery swapping is the here and now story, we also need to talk about the product pipeline. CEO William Li has been clear that the Onvo L90, a new model targeting a broader segment of the EV market, is expected to start boosting profitability by Q4 2025. This matters because NIO's current lineup skews toward the premium end, and adding a model that appeals to more cost-conscious buyers without sacrificing brand technology could open up significant new volume. If NIO can grow volumes with the L90 while keeping swap station utilization high, you have two revenue streams, vehicles and infrastructure, both contributing to margin expansion. That's the kind of combination that can shift sentiment from turnaround story to growth story. Of course, we also have to consider the broader EV sector. Even if NIO has its own catalysts, sentiment in this space is often influenced by what's happening with peers like XPeng and Li Auto. Recently, both have shown flashes of strength, either through delivery numbers or favorable analyst coverage. That rising tide effect can sometimes help NIO even when its own news flow is quiet. On the macro side, there's no major new China EV policy update this week, and global market conditions are relatively stable. That's actually a plus here. Sometimes, no news is good news because it lets the company's own fundamentals shine through without being drowned out by headlines. So, going into Tuesday's session, what should traders and investors be watching? First, the open. If we see early buying pressure push NIO toward $4.95 or above in the first 30 to 60 minutes, that's a sign momentum could carry it into $5 territory. Second, volume. A breakout above $5 without volume can fizzle quickly. But if the move is supported by higher than average trading activity, that's a stronger signal. Third, sector performance. If XPeng and Li Auto are also green today, that could give NIO the extra push it needs. For short-term traders, the setup is relatively straightforward. Watch for that $5 break, and consider how much conviction you see in the move. For medium to long-term holders, today is more about observing whether the market is starting to price in the positive trends we've been talking about: battery swap profitability, product diversification, and sector sentiment. It's important to keep in mind that even if we get a breakout, the $5 level could still act as resistance for a while. It's not uncommon for stocks to push through a key level and then retest it from above before making a sustained move higher. So don't be surprised if there's some back and forth. The bigger picture is whether the trend stays intact, with higher lows forming over time. To sum it up, NIO's Tuesday pre-market story is about a stock knocking on the door of a key psychological level, supported by quietly improving fundamentals and a relatively constructive sector backdrop. The battery swap network is moving toward consistent profitability, the Onvo L90 promises a new growth avenue in 2025, and the technicals are set up for a potential short-term breakout. This isn't about predicting an overnight moonshot. It's about recognizing that the building blocks for a stronger narrative are already in place, and that if $5 falls with conviction, it could bring in a wave of traders and investors who have been waiting on the sidelines. So as the market opens today, keep an eye on the early price action, the volume behind any move toward $5, and how the rest of the EV sector is trading. Whether you're in it for the trade or for the long haul, the next few sessions could give us some important clues about where NIO goes next. If you found this breakdown helpful, hit the like button, subscribe for more market updates, and drop a comment. Do you think NIO will hold above $5 once it breaks, or will we see another pullback into the $4s? I'll see you after the bell with the recap.